company A LLC. A LLC is the limited liability company. LLC stands for limited liability company. How we see private limited in India most commonly. So this A LLC has invested in a building. Say 1 million they have invested. What is the purpose of they investing it? What do you think the reason behind this investment? So number one, they would like to use this asset for their own purpose, or maybe they want to use this and make some future economic benefits. They want to make some future economic benefits. What kind of future economic benefits? It can be it rental, be it capital gain, or whatsoever. Or maybe if they use by themselves, they may save some cost on the outside rent, like opportunity cost. So it can be different. When these future economic benefits are coming back to ALLC, so what is a minimum expectation? So they started getting some revenue. Okay, they are making some revenue. What is the minimum expectation for this ALLC? Because I already spent from my pocket 1 million, this is what I want to recover. And only the balance I want to offer it as a taxable income. So I want to recover the cost. So I want to recover this 1 million. Right? This is the basic expectation of any entity that is investing in the assets, or maybe any entity that is incurring the liabilities. So at the time of, in the case of assets, at the time of recovery, or in the case of liabilities, at the time of settlement of the liability, this is the minimum expectation. But because of some corporate tax provisions, Indian income tax provisions, it says, fine, I want to tax your entire revenue, but I will not going to give you the entire 1 million as a deduction. I'm going to give you, say, for example, 800,000 only as a recovery. So when you are recovering your asset, you can recover only up to 800,000. If this is the case, then the difference, this is the regular scenario, normal scenario. Normal scenario, your taxable income would have been different. In this case, the tax provisions have invoked a different in such a way that your tax liability have been shooted up. Is it not? Previously, you were getting the deduction of 1 million. Now you are getting only 800,000. So your tax income is going to be, taxable income is going to be high. Obviously, on this 9% additional tax liability we are going to incur. So this is the basic fundamental behind the IAS 12. An entity incurring certain expense in the form of carrying amount. So they incurred some 1 million of spending. So the minimum expectation that they should able to recover this while getting the, while arriving at the taxable income. But because of certain provisions in the UAE corporate tax law, the respective income tax law, you are not getting the 100% recovery, but there is a difference. There is a difference between your carrying amount. So in this case, your carrying amount is 1 million. You have spent 1 million in the books. Carrying amount is 1 million. But tax book says the tax base, the amount that is allowed for the deduction in this case is only 800,000. So there exists a difference, and this difference is called as temporary difference. Okay.